right.
Okay, then.
All right, we just started the recording. Let me put on my video so at least you can see me. Okay, cool. All right, so go ahead and introduce yourself to the audience. Kind of like.
Yeah, do I need to turn on my camera too or no?
No, I mean, it's up to you. If you want to show yourself to the audience, great. If not, it's up to you.
I'm good now, though. But hi, my name is Veer Singh. I'm 16, about to turn 17 in a few days, and just like other teenagers, I'm really interested in stocks and building a financial future for myself, and just building a base currently.
Okay,
And
and then tell them how we met, right? You went on
yeah,
one of my live streams. You like DM'd me, right? And that's how we kind
yep,
of like. So
I was
yeah.
I
And
was
so
on
you
TikTok.
can't right now because you're under
Uh-huh.
18. You can't get an account. You have to get a custodian account through your parents
Yeah.
if you want to get an account.
Okay. Yeah, I've talked to my parents about that. They're okay with it, so I'm gonna have to do that.
Okay. I'm not 100% sure, so you're going to have to do a little bit of research. I don't know if you can get a custodian account with Robinhood. So you just go on the website
Yeah, I
and
can
oh, you can?
with Rob
Okay.
because my
Okay,
friends
cool. So
use. I think they do
I'll send you
stock
the.
too.
Did you already click on the Robinhood link through my profile link tree?
No, I haven't clicked to that link.
Okay. So yeah, just go ahead and set it up, and then I can answer whatever questions you have. I mean, do you have like questions right now? So what you're gonna have to do because you're under 18, it's gonna go through your parents, and then
Yeah.
once you turn 18, you take over the account or something like that.
Okay. Yeah. So I don't wanna. I might trade because I get that trade has obviously a lot more risks to it. But I want to build my portfolio in the sense that I'm gonna
So
invest.
if you're gonna trade, why don't you can once again click on my link tree, click
Okay.
on interactive brokers. It's like I think it's the first link. But if you
All right.
click on the link for interactive brokers, they have a paper account, which is like a fake money. Like you get 100 grand, and so you
Okay.
can just trade with fake money on interactive brokers
Yeah.
until you turn 18, and then you can go live.
Okay. Yeah, that makes sense. It just so I can practice my trading there, but I just like whatever money I make because right now what I'm trying to do is I have an auction, like there's a place that auction out they're sometimes they're bad products but they're still good, so companies that don't get sold or they get returned, that's what this person buys and he auctions these things out. So I've bought a bunch of things and they're packed new, no scratches, nothing, and I'm trying to flip these things. Like I got 2 treadmills and I'm trying to
Okay.
sell, and I have a bunch of furniture at home, so I'm trying to build a like a offer up and Facebook marketplace like that, so I can
Okay.
sell stuff. And then I want to use that money to invest into stocks, like good stocks
Perfect.
that are gonna grow, like Tesla, Amazon, Apple.
Yeah.
Uh, yeah,
Yep. Sounds like a good plan to me.
but I want to know like how much I should invest in, like as a beginner, as a under 18 person.
So for sure, as a beginner, start with a paper account, so it's like fake money, and do all your day trading on that. And then
Okay.
on your real money account, I would highly recommend in the beginning doing very little trading. Like maybe, let's just say you're investing $100. I would say take $90 and buy like Amazon, Tesla,
Okay.
Apple, right? And then you
Yeah.
can take the $10 and then you can try to day trade. And if you're doing
Mm.
really well, maybe you increase it. If you're doing
Yeah.
bad, maybe you should learn your lesson and do more on the paper account.
Mm-hmm.
But I would take like I said, if you're investing $100 or $1,000 in the beginning, but once again, if you want to be more aggressive, I would only do like 10% day trading, and then 90% your mind has to be 90% of the stuff that I buy. I'm gonna buy it. I'm gonna hold it for at least like a year, 1 year holding. And do you know why you want to hold it for a year?
So however much it grows, I can then take a certain percent of profit out of it, right? Is
Well,
that
you
what?
also pay less taxes. People don't
Okay.
bring this up. When you day trade, you're going to owe much higher taxes, and you need to talk to like a CPA or accountant. But if
Mm-hmm.
you hold a stock for more than a year, you're going to pay like usually less than 50%, but sometimes you can save up to like 75% on the taxes if you're holding it.
Dang.
And then the reason I don't know if you've seen that hashtag never sell. You know how I
Yeah.
put a lot of, so that idea is actually, if you never sell the stock, you never pay taxes. So then how do you get cash out of a stock if you're never going to sell it? Well, what you do is you get a margin loan. Do you understand what a margin loan is?
No, explain that to me actually.
So what you can do is, let's just say I have $100,000 of stocks. Well, then Robinhood, as long as they're high quality stocks, not bad stocks, Robinhood will lend you 50%. So if I have 100 grand of stocks, they'll lend me $50,000. And not only do they lend me $50,000, they lend it to me at 2.5% interest.
Okay.
So, and which is like super cheap, right? Because like, you know, most houses are like 3-4%. And then if you think about it, like if you get in credit card debt, it's like 30%. So by having that Robinhood and learning how to like borrow from it, if you ever get in credit card debt, you ever want to start a business, you ever want to buy real estate, you need to like learn how to use that margin. And once you learn how to use that margin, it's easier never to sell your stocks, because even if you don't sell the stocks, you can always borrow when you need money and you don't pay any taxes. And you know, and then when you don't want to buy, like let's just say you think the stock market is overpriced, instead of forced to buy stocks, you just pay down your debt. You know. So and I'll give you an example right now. No, go ahead. You had a question?
Oh, I was just gonna say, because so this is a very different way of looking at it, I guess. Because I thought, in the stock thing, you invest money, you wait for the money to grow, and then say it grows, 50%, then you take like 25% of the profit, and then you just wait for it to grow more, and then you just keep taking some money out. I thought that's how you do it, but so you're saying you grow your portfolio.
So the way I do the never sell, the only time you're going to sell something is when you don't think it's good anymore, right? Like Apple, I'm never going to sell it, right? But if for whatever reason, let's just say 3 years from now, 5 years from now, people stop buying Apple phones. Like, let's just say there's now like Grape, right? Someone creates the Grape phone, and everyone wants to get into the Grape phone. And like, for whatever reason, Apple is not well run. Like Apple becomes America Online, or like, a company that dies, right?
Makes sense.
Then you start to sell, right? Then I would start to slowly, and then remember, when the market goes up a lot and you think it's overvalued, that's a good time to sell stocks. So like, let's say like I have $30,000 of margin debt and I have 100 grand of stocks, and I think the market is really high. Well, then I go to like my crappiest stocks that I don't like and I want to get rid of, and I sell those stocks to pay down my margin debt. You know? So you do want to sell stocks, but if you have a company like Apple, Tesla, a Bitcoin, for example, is another one. If it really is the best asset, and like there's no competition, and like it's then you actually want to just keep it. And if there's dips, you obviously want to buy it when there's dips. But you usually want to be selling when like the market has gone up a lot, and you have some margin debt. And let's just say there's a company I don't like. For example, I'll give you an example. So let's just say now NVIDIA is not as good anymore. Like AMD made like a really good chip. Then I might start selling some of my NVIDIA to buy AMD. Or if I have a lot of margin debt, like the rule of thumb for me is like don't have more than 20%. So like let's say I have $100,000 of stock and I have $30,000 of margin debt. Then I highly recommend you figure out a way to get your margin debt down to 20%, down to $20,000, whether it's like you have a job and you're paying it off, or maybe you go to your crappy stocks that you don't like and you sell it. And especially stocks that you're losing money. Like let's say I bought, let's say NVIDIA, once again, I don't want to say NVIDIA is a bad stock, but let's say you're down $100. It's way better to sell NVIDIA at a loss, because once again, that's tax deductible, right? So if you're up $100 on, like let's say AMD, but you're down $100 on NVIDIA, it's always better to sell the stocks that you're negative on, because then you're going to pay less taxes. And once again, like you're way ahead of the curve because you've never even paid taxes. You're not going to have to pay taxes till you're 80. So, but like all of these strategies, if you learn at a young age, you're going to crush it when you're my age. I'm actually 33. So if I had that kind of knowledge at your age, I think I'd be a lot more successful.
Yeah, I'm just trying to catch up. I think a lot of my generation is trying to invest.
School is a scam. School doesn't teach you personal finance because it's a scam. So just learn as much personal finance as you can at a young age and take advantage of it. And don't pay money for classes. Classes are bullshit.
Yeah.
You can learn anything you want online for free.
Yeah. Cool.
And that's another thing with my hashtag. That's why I say hashtag never sell, because I'm never going to sell my stock and I'm never going to sell you any crap. Okay.
Yeah.
I'd rather you take that $200 and you go invest it. I'm not going to sell you. You know what I mean?
No,
like, I don't understand why
rich
people, I don't understand why rich people want to sell people courses. Like, if you're already rich making money doing like stocks and real estate, why are you trying to sell? You know what I mean? Like, you should.
They're just trying to make money off of that too.
No, I know, but that's greed. That's greed. Like, how do you give back to the community? Do some charity, right? Do some charity. Create some free content, and then, like, if people really do want to do it, I would make it donation based. Like, these bigger. I mean, really, if you need the money, just make it a donation. So the people that make money off your classes donate money. You don't need to charge them, but whatever.
Agree. So, and you're taking margin loans out for, I'm guessing, real estate, right?
So they're not called margin loans for real. It's only margin loans for stocks. You take out normal loans for real estate. And yes, that's why I recommend. It's like, you never buy real estate all cash, right? You always get a loan.
Yeah.
That's like it's what is it called? It's called using leverage, right? You want to buy assets using leverage. So that's why, like, for me, when I bought my first property, I actually used 97% leverage. I did an FHA loan. So I bought a $500,000 house for $15,000 because I only needed to put down 3%. So yes, I mean, basically any asset you buy, if the rate, my rule of thumb is, if you can borrow under 5%, you should do it. Inflation is usually higher than 3%. And I would say the government lies to you. It's usually 6%. So if you can get into debt to buy assets, whether it's real estate, crypto, or stocks, and you can borrow under 5%, and ideally right now, because you can borrow under 3% with Robinhood, I would only do it if you can borrow under 3%. And there's other sites too, like Interactive Broker. They let you, if you have more than $1 million, they'll actually let you borrow under 1%.
Wow. Okay.
Yeah, the goal is get to $1 million, so then you can borrow from Interactive Brokers at, it's 0.75%.
Yeah, and you said something about crypto. Which one should someone invest in? Ethereum or?
Start out with Bitcoin. I always recommend everyone start out with Bitcoin first, and then you can go to this website called CoinMarketCap, and it shows you all the list of the largest cryptocurrencies. I say in the beginning, until you know what you're doing, there's a list of the top 10 cryptocurrencies. I would just stick to the top 10. And as you get more experience, then you can go buy the small coins, speculate, and do all your day trading and all that fun stuff.
Yeah.
But the same way I told you with stocks, spend 90% on solid companies. Same thing with crypto. Like, if you're gonna invest $100, put 90% into Bitcoin and in the top 10, and then maybe 10% you can speculate and day trade.
And I don't know if I was watching you or some video, but people suggest stock groups or ARK groups of that.
Yes, ARK is a great ETF, and there's actually 3 funds I recommend: ARKK, ARKF, and ARKG. One's fintech, one's genomics, and the other one's innovation. ARK is innovation. The fintech one is ARKF, and then the genomics one is ARK. No, that's a different one. That's internet technology. Any of those ARK funds are good. I mean, you can buy the other ones too. Those 3 I gave you, the only reason I recommend those 3 is because you get the maximum margin loan on it. Some of the other ARK, because they're smaller, they're not going to give you the full 50% loan. They're gonna want you to it's gonna be instead of 45% or 35% because it's not as stable as an asset. You can check on your Robinhood. If you have a Robinhood and you turn on margin, it'll tell you the margin requirements, so you can figure out which gives you the most margin.
So what should someone getting into stocks, what should their goal be? Just whatever money they get investing?
Go get an Interactive Broker paper account and mess around with free money, and then just set a daily or a weekly goal. Because people always have way too big goals. I would say try to invest $100 a week or $10 a day, and then just stick to that. And then make easy goals. I want to first get to 1,000. When we get to 1,000, make it 10,000. When we get to 10,000, make it 100,000. People they just get too afraid and they're like, oh, and they never do anything. You know what I mean? So
Yeah.
that's why you see my dumb videos where I'm like, oh, just buy $10, buy $10 of Bitcoin, buy $10 of Apple. Like literally just start really, really small, and then just kind of like get more comfortable. Then you do more.
Yeah, because a lot of people now are saying it's you're losing money by not even investing. You're losing more money than if you don't invest, even in crypto.
You gotta be okay when you're young. You gotta be okay with losing money. Don't learn. Like I gave $120,000 to USD, and I'm gonna be honest. Like I didn't learn like anything about investing in my MBA program. It was all just networking and just super smart professors that have no like business sense because they've never worked in business. Some of them were good legit. I don't want to downpick because like I did get to talk to the CEO of Tinder and Playboy, which was cool. But so the best way you're gonna learn, just pretend like, hey, instead of giving $120,000 to USD, I'm gonna go and invest $1,000, and even if I lose $500 or $1,000, I'm gonna learn. The best way you learn by losing money. So you got to be okay with losing a little bit of money.
Yeah, makes sense.
But like, what really makes me mad is people are like, oh, like stocks are like the lottery, and it's like, no. When you buy a lottery ticket, you lose 100%, and the odds are stacked against you. Buy a stock, it's very unlikely. Like even when there's a crash, crashes like you'll lose 35%. So even if you invested $1,000 and it goes down 35%, you only lost $350, and that's only like if you're a loser. Have you ever heard of the term paper handing?
I have not. No.
So paper handing sissies are people that sell when stocks are down, right? So if you paper hand sell at the bottom, then you lose $350. But if you have my spot,
you have to hold.
You buy the dip, like you double down, you buy more, and you don't sell. Eventually, it'll recover unless you're buying like a really crappy or speculative stock.
Yeah.
So as long as you don't paper hand and you hold it and you actually buy the dip, it's like a good company like Apple or Bitcoin, you're going to make money. But the lotto ticket, you for sure, once you buy it, you lose it. You lose $100 or whatever the lotto.
You can you can kind of not guess, but you can predict when a stock is going to go up or down with a lot of factors.
Not really. If anyone says they can do that, they're full of
but
it.
what
You really can't predict the stock long term, right? Like over 5 or 10 years, it's going to go up.
But is it true that like Apple stocks increase before September because that's when the new products release?
I don't know. These are all things you're going to learn. All I know is when Apple is going down, I try to buy as much as possible. When Apple's on a tear, I'm not buying it. Like when it's going up a lot, I'm not buying it. And if I think like I have too much Apple,
you cut out.
There's another crash. I can use my margin. Yeah, I'm actually in an area of bad reception, so I'm gonna actually have to end this talk. Are you still there?
Okay.
So we'll do another talk again. Like I'll talk to you again soon, and you can ask me more questions.
Yeah, for sure.
And,
I have like a bunch of questions, like NFTs, how much you started with, and stuff like that.
NFTs, in my opinion, right now, it's very hard. Anyways, we'll make it. We'll do another
call. I'll
soon.
have some questions for you.
Cool.
Great.
All right.
Bye. Love talking to you. Bye.